Hello, it's Paul Scott here on Tuesday the 9th of June. I'm recording this at about 20 past 11 in the morning because I've got to jump in the shower and go off to for a lunch in the city for 12:30. Then after that I'm going to a company meeting at a broker, which should be interesting. To talk to the management of a small cap company. So unfortunately that left me very short of time this morning to do the small cap value report. But I've looked at IOMART and CML Microsystems on the written report. So I'm now just going to whiz through some stuff that I didn't have time to cover. So now, interestingly enough, a big management buy at Porta Communications, PTCM. This is a really big buy. Bob Morton has bought 6.3 million shares at 7p. So what does that work out at? Divided by 100 is 63 gram per penny, times 7, 42, plus another 21, 441k, I make that in sterling terms. This is a really small company as well, market cap's tiny. Let's have a look at it. I mean, I've held this for quite a while now, and it's been a very disappointing share. I probably would have sold it if it hadn't been for the repeated and large director buys. Here we are, 19.8 million market cap. So something's going on there, because you don't get directors shelling out serious six-figure amounts to buy shares unless they see a positive outlook. And interestingly enough, this Bob Morton, obviously very well known investor, he sold shares in Vislink recently, and I think that is probably sensible. I've sold mine as well. I think it's fully priced. I mean, it moved up from 50p to about 60p. It wasn't really clear why. There's a lot of talk about new products, but the last set of results were not great on Vislink, so personally I've taken my profit out of that as well. And that Bob Morton is doing the same thing is quite reassuring. Okay, what have we got next? Bear with me. I've got two whatsits open, so hang on. Creston. Now, these results for year ending 31st of March 2015. Now, I hold some shares in Creston as well as Porta Communications. I should add, I'm never giving recommendations here. These are just personal opinions, but you need to be aware that I do own shares quite often in things I talk about. These results look reasonable. Revenue up 3%, no great shakes there. Headline profit up a little bit, 2%. Nothing particularly exciting. Net cash of 8.3 million, that's quite good. But I like the fact that the earnings, I think, are about 12 or 13p. What's DEPS? Oh, diluted earnings per share, up 11% to 13 pence. But if you look at the, and it's got net cash as well, remember, but if you look at the share price, I think it's only on a P of about 9 or 10. Oh, 10, there we are, just done over 13p earnings, so it's just over 10, it's up 4.5p today, and it looks like it's making a new 12-month high there. It's just broken out there. Very high stock rank, 97, reasonable PE with net cash, quite a reasonable dividend yield as well, 3.5%, so I quite like this one. I think that's worth a look. So that is Creston. Actually, let's have a quick look at the balance sheet just to make sure there's nothing hideous in there. I think there was a load of intangibles, but you tend to get that with acquisitive marketing companies. So here we are. Yeah, that's right, 105 million, but I think the balance sheet's still okay. So up here you've got your intangibles, 106 million, which is basically from where they've bought other companies. Take that off the 117 and you've still got about 11 million net tangible assets. So that's the right way around. Let's look at working capital. You've got 37.5 million current assets, less current liabilities, which should be lower, 28.2. That looks fine to me. I look for at least 1.2 of that divided by that, and just visually I can see that's roughly around 1.2, 1.3. And then long-term liabilities, there's next to nothing there, only 3.7 million. So that to me is a reasonably okay. That's actually fine for a cash-generative business. Let's look at the cash flow statement actually. So what have you got? 7 million, 7.4 million. Add back your tax. bit of finance, add back your depreciation and amortization charges, working capital movement. Note that trade payables have been paid down quite a bit this year. Very nice adjusted operating cash inflow there. A bit of tax. It's chucked out a nice 6.6 million net cash inflow for the year, so that looks fine. Very little in terms of capex, as you would expect, because it's a people business. Financing activities, there's the dividend. Well, that's comfortably covered by the cash they've generated. This all looks fine to me. Oh, and they're buying back shares as well. Purchase of treasury shares, even better. So that all looks fine to me. I think often the cash flow statement actually is a lot more useful than the P&L, because it's different. It's harder to fiddle the cash flow than it is. It's very easy to fiddle the P&L actually. Right, what have we got next? WYG, is that WIG? I don't know. This is a some sort of project management consultancy. I haven't had time to look at these figures in detail with it. This looks quite interesting actually. I've never held shares in this, so I don't know the company that well. Revenue up 3%. These are final results. That's a full year. Adjusted operating profit up 21%. Fairly lowish margin. That's about a 4% margin. Adjusted earnings per share up 31% to 9.2p. It's always worth checking what the adjustments actually are, but I haven't got time to do that. So let's have a quick look. So 9.2p is the figure that I've got to keep in my head. Well, there you go. That's actually on quite a reasonable PE of about 11.4. Looks as if they've come in line with expectations. It's traded sideways for the last year. Let's have a look at the last 3 years. Okay, traded sideways since about the summer of 2013. It seems to fall back after every jump up there. Not much of a dividend yield. Very little asset backing, because it's on 120 times net tangible asset value. I think there was something quite good in terms of the outlook on this one, so let's go back to, yeah, it looks a mature business. Oh look, they must have made some disposals in 2009, 2010. Heavily loss making and only marginally profitable now, but it looks like it's been sorted out. So that's dividends resumed in 2014. That's a good sign. So although you only get a 1% yield, at least they've, dividends resuming after a long gap tells me that this is a company that was in trouble, which is now looking okay. So let's go back to the figures briefly. It's a pity I've got to dash out, as I would have liked to have looked at this in more detail. Yeah, so PE of 11. Now I think some of the outlook this looks interesting. Trading seems in line with board expectations. Good, strong pipeline of international development, including a 400 million major project and framework pipeline across Africa. 130 million euros pipeline project, EU budget approval. So it looks quite an unprecedented level of bidding activity currently in progress. So these are quite bullish outlook comments. I think that's worth a look, although it's always worth checking to see how bullish management are in previous outlook statements. Some companies, they just, it's ramp, and things never turn out to be as good as they say. But I don't know this company at all, so... Oh, actually, I might have commented on it before. Let's have a quick look. So look back on the Discuss tab on Stockopedia, and this shows... I last commented on June 2014. There isn't really time to have a look through all of this. Let's just quickly see what I said, because I normally would flag up if there's something. Not a company I'm very familiar with. Oh, well, I don't know what I'm saying there, so I might put that on a period. I seem to have an issue here with the adjustments to the... Okay, so here I'm querying the adjustments to earnings per share and saying I think they're questionable. So that would I'd need to look into that in a bit more detail. Okay, going back to today's results. So I'm getting bogged down here a bit. OMG, this is a really interesting company. I like this one. I don't currently hold this one, but I have done. They've declared, now the interim figures are not great, down 4.4% turnover and an adjusted loss, but they're saying a big contract fell into H2 because these are the H1 results. It's a 3D imaging company, but they've declared another 5p per share special divvy on top of a 4.5p special divvy paid recently, and the shares are only 40 something p. So this thing's throwing out cash like nobody's business, because they disposed of a small and only marginally profitable division for 21.7 million in April. There's another division in this company which is heavily loss-making, which is being shut down. I think it's OMG Life. There we are. This is worth looking into, because if you strip out the losses from OMG Life, the rest of the business is very nicely profitable, and it's got a great balance sheet, so that one's worth a look. Penna, these results look good. Again, I don't really know this company, but revenue is up 22%. Look at that, pre-tax profits up 70%. Where's the adjusted EPS figure? It's got net cash, which I always like. Diluted earnings per share 15.1p. Quick look here. Sorry, this is just a massively brief run through everything this morning. 15.1p, so it's on a P of about 12. You've got forward P of 9 here. Decent stock rank. It's got net cash. Dividend yield about 3%. Worth a look. Although the NA there means that it doesn't have tangible net assets, but those results seem to be worth having a dig into. Software radio technology. Turnover's up 8.5 million, but made a small loss. The cash figure looks okay. Always so near and yet so far, this company. I've seen the CEO present a few times. I don't think they've got much visibility on earnings, that's the trouble, so I'm probably not going to revisit that one. If you look at profitability, it's just up and down, good year, bad year, good year, bad year. I don't know. It's difficult. It's a difficult company to judge that. I think the 37 million market cap is probably a bit on the warm side. Okay, I think that's nearly it. Sanderson Group. I think these figures were okay. 9 million turnover. Yeah, I haven't got time to look at that. Oh, Plus gave an update today. Plus 500. They're saying they're giving details of the number of clients who are reactivating their accounts and so on. They've said about 6% of clients, I think it was 6%, have withdrawn all their funds once they got access to their account again. Oh, that's not working. My internet connection here is a bit ropey, unfortunately. ShoeZone, I'm getting concerned about. That's dropped again today. I mean, it's looking like they're warming up. The share price is telling me that they're probably warming up for another profits warning. So I'm gritting my teeth on that because it's one I hold. Let me just tick things off. Tristel is, yeah, here you are. I think it's dropped a bit more since that. So, but look at the dividend yield. I mean, if they don't warn on profits, then this might be a good time to buy. But I don't really have a lot of confidence in management of this company, given that they floated and then put out a profits warning, and you just can't do that. It shatters your credibility. Tristel, interesting one, interesting company. They had a sharp fall this morning, which seemed to be on the back of press comments about wipes, disinfectant wipes, being counterproductive. It doesn't affect this company, I don't think. It doesn't look cheap, P's of 18, 19 and so on, but it's got net cash and it has been growing decently and has new markets that it's going into and so on. I worked out, I think they're going to exceed 4.27 pence earnings for the current year. I think it'll be near about 4.5p in the current year. Nice little company, probably fully priced I think at the moment, but I do like Tristel, not one I currently hold. Well, sorry, I'm going to have to leave it there because I've got a dash. Speak to you soon. Bye.